Good afternoon, everyone. My name should be there, Jose Maria Serrano. I'm president-elect for next year. I'm following Maria's step, and it's not going to be an easy task. But we're going to go very quickly, and I'm going to ask our panelists, Joshua Young, Kevin Spacey, and Andrew Stearns, to very quickly, and the first question, just tell me what do you do, and how do you relate with the conversation that we started on the banking and financing, and how the TenX, that we're going to start with TenX, can help us. So first of all, in TenX, what do you guys do? What is the online that you guys do?
So my name is Kevin Spellacy. I'm the Regional Vice President for TenX here in Miami, Florida. TenX is the largest online transaction and marketing platform for both commercial and residential. Our team here, my colleagues tell me to speak up. Is that loud enough, Mark? It's not you, it's the putting it. Oh, okay.
Just shout.
Okay. The question is about what we do. We are a marketing and a transaction platform for commercial real estate. So we market assets from roughly $1 million to up over multi-million dollars. The largest transaction we did was last year. It was a $97 million sale of an office building out in California. It was the largest online transaction in the history of anything traded online. And I think what our firm does is provides a different way to transact real estate. Angel mentioned what we do is the same. We trade and sell real estate. We bring buyers, sellers, and brokers together and give them the opportunity to transact real estate. How we do that has changed significantly, and our platform gives our buyers, our brokers, and our sellers the ability to do all of the transaction online. So,
thank you very much. Now we're going to move with Rachel. Josh.
Thanks. My name is Josh Young. I am the founder of Razzlecom. I was in the banking industry. I'm a lawyer by trade, and I lived through the ups and downs of the commercial real estate market in the last decade. And I founded Razzle.com to be actually one of the few players that you saw on the board in terms of getting involved in the commercial lending marketplace and being a connector from borrowers to lenders, primarily banks. The commercial lending market space is about a $2 trillion market, and in the $5 million and under market, which Angel alluded to, is pretty much dominated by local and regional banks. They are the dominant player, and what we do is we've built a marketplace where a borrower could come in and get connected directly with a right lender through a matching algorithm that takes into account various attributes like geography, loan size, property type, loan to value. And what we lived through and what we found out is banks are very similar to humans. We have likes and we have dislikes, and certain banks like certain property types, they like certain geographic areas, they like certain loan size. But unfortunately, they don't necessarily tell you that. There's no signs out front on the front door that says, this is what we want. So what we did is we built a platform that allows the banks to tell us what they like, what they don't like, and create an algorithm to efficiently connect a borrower to that lender and create some transparency. And that's another big thing that we've learned is that we want transparency in the transaction. We want to know that we're getting a good rate, good terms. We provide that kind of transparency. And that's in effect what Razzle.com is intended to accomplish.
Thank you very much. And Andrew.
My name is Andrew Stearns. I operate a company called StatFunding.com. What StatFunding does is allow individual and institutional investors to take fractional participations in real estate lending. I spent 12 years as an attorney. A large part of my practice was dedicated to representing banks and non-banking financial institutions. And what I saw was particular areas of lending that had way too much friction. And I thought there would be a player that could come in and easily satisfy that need. We generate loans on our own behalf, and then we allow our members to then fractionally buy those piecemeal. Thank you for introducing us, Angel. And I think our business is complementary to what banks do because we're really doing the things that banks cannot.
Mm-hmm. Okay, great. On one of the questions that Angel was talking about is regulations. How do you deal with regulations? And this can go to anyone of the lending or funding, because that's what you guys are, right? You fund projects.
Right. Well, I think, look, whether you are a Democrat or a Republican, I think one thing that would be great would be for each person who is elected to office, they should be required before they step in their first day to go open a business. To go through all the steps that almost everyone in here has done, from pulling the permit to getting the fire inspection to applying with whatever 3 acronym regulator you need to apply for, to understand how much friction there is for small businesses to start a business in our community and in America. And because I think in the last 50 years, we have been building up all these regulations and stacking them on top of each other, but no one is paying attention to the whole pie. I think over the next 10 years, we need real leadership to come in and streamline a lot of this regulation so that small businesses can easier enter into marketplaces, which will make everything better for all of us.
Josh, how about you?
Yeah, I mean, I think what we've seen in the banking industry, Angel can attest to this, no doubt, is it used to be the old rules, kind of one compliance sort of regulatory person at a bank for every 3 loan officers, and that ratio is flip-flop today. And so what that's creating is a giant challenge for banks to be able to market and compete on the sales side. And quite frankly, that's one of the reasons we created our platform, is really to kind of be an extension of our bank network to help them find new relationships, new opportunities in the market. On the regulatory side, the appraisal. One thing that we've run into recently, actually through a TenX, we've been trying to find a solution. Is the appraisal requirement on loans over $1 million? You have to have an appraisal, and so given the time constraints with some of the other platforms, TenX being one of them, it creates some regulatory challenges for banks to get into finance those. So I think there's probably some, and I'm not sure why some of the regulations exist, but they do, and they do create some challenges that still remain, and I'm sure we'll solve them down the line. But regulatory issues are definitely affecting this industry.
So, just going back to that, on the matchmaking that you guys do with the banks, which is basically what you guys do, right?
Yeah. Dating for banks.
Yeah, dating services. What are the requirements for a person to present a loan that you can put in the bank? What do you need to get in your platform?
So maybe to feed off Andrew's comment about small businesses, small business, if they're going to own or occupy their property, they have a couple of different options. One being the SBA, which requires a laundry list of documents and business plans and everything else to get sort of teed up with them. But they offer great programs. But you have to be organized. And that same sentiment applies even on the commercial real estate, where you're just buying some rental property, whether it's an apartment building or a shopping center or what have you. You have to be organized. So you're going to have to present tax returns. You're going to have to present financials, personal financial statement, and it's going to be a process, especially if you want to get bank level rates. And the rates today, I mean, we're seeing things in the 3% range. So there is the cost of capital is cheap, but it does not come at the they don't just give it away. And Angel will tell you for sure. I mean, the safety and soundness aspect is very prevalent, but you got to be organized. Now, on the flip side, if you're looking for bridge money, hard money, there's very little that's involved in terms of documentation. I will tell you that I've seen over the last, say, year, the influx of the no-doc stated income type programs that you saw in the mid-2000s that were probably very key to some of the issues we saw. That is really starting to come back into flavor right now, and it's happening on the commercial side. So I'm a little weary of seeing some of that. I mean, we're really more focused on the bank level institutional stuff than the hard money, stated income programs, but they are there. And it's a little bit concerning.
But these are more hard equity type transactions, right? I mean, it's not banking transactions.
Yeah, no banks.
These are investors.
Yeah, no, banks really haven't let their guard down. If anything, I'd say their guard is at a pretty good pace right now, and they're They're hungry. Everyone seems to have a pretty full pipeline across the board in terms of the banks. And there's no shortage of deals, and certainly we say no more times than we say yes in terms of something that comes through, and you see that with the banks. But I think I'm not worried about the banks. It's some of the other sort of alternative financiers that are putting together deals that may or may not make sense, and they contribute to the overall portfolio.
Moving back to Andrew again, what's your ideal customer? How do you qualify? How can I put my money in your system? Which I don't have it, but that's okay.
As an investor, you have to be an accredited investor, which the Jobs Act created a provision which allows us to do general solicitation, which means just advertise, so long as all of our investors are accredited investors. So we have an accredited investor verification program, which has a laundry list of items, but it's several million people in the United States and businesses. If you are on the borrower side, we traditionally see borrowers who are either foreign nationals who have very little in the area of United States kind of documentation, or they're investors who, for one reason or another, a bank doesn't want to finance them.
So to put it in perspective, if I have a property that I want to sell, I put it to TenX, and then as a broker, I go with the platform, and I need some funding for the buyers. Do I go to you, and how do you guys relate? Or you three guys, of course, four, because you have. How do you see the relation? How do you put it? I mean, I'll put it in the market with you, and then we talk a little bit about how the brokers are protected on that side, and how do you fund that?
Well, in my case, it's very simple. I do direct originations with people that knock on our door and communicate with us via the internet, and then we also work with the established broker network in the community.
So financing is something very new for us at TenX. We have traditionally been an all-cash transaction platform. There were no things like financing contingencies on our platform back when we started this business in 2009. We are now shifting, as the market has shifted, to allow for things like financing contingencies. We are providing debt quotes right on the site. So sources or companies like Andrew and Josh's firm, and even banks like Gibraltar, we are looking to establish relationships with those banks, allow them to provide quotes on deals they see on our site, and advertise their products right on our site, and give buyers, brokers the access to that information right through the TenX portal.
Great. Let me just ask you again on the TenX. There's a question on us brokers on. Okay, I put the property of my buyer or my seller, the owner, through TenX for your platform. How do I get protected as a broker?
I think it's a really relevant and a very good question, Jose. I think Josh mentioned it earlier, transparency, right? We pride ourselves on being very transparent throughout the entire transaction. The entire thing happens online. Anybody can see where the bids and the offers are coming at any given time during the transaction process. Everybody who signs up and signs the non-disclosure has access to all the due diligence information. We don't withhold any of that. But specific to the broker question, we started kind of small, and we've started by allowing brokers on the sell side and the buy side to register themselves and a client, and that allows them to tag a relationship within our system. And Mark Wall, my colleague who is somewhere in the room, is actually right now as we speak working with our legal team to draft what we consider like a preferred provider agreement, which will allow a buyer broker to identify themselves and their client and protect that relationship for a specific period of time. So any deal transacted between those two parties on our site, that individual will receive credit for the deal and then the commission that comes along with it as well. And we anticipate that will be ready by about first quarter of 2017.
Okay. Any questions that anybody has, just raise your hand and we'll talk. Yes, Donnie.
So for Andy,
Louder, please.
For Andy, let's say I want to invest in you, I'm an accredited investor. So is there like a percentage? I invest in people like with Orion and others. How would I work with you? I give you 300,000 or whatever the number is. Give me a percentage, how it works?
You mean like a broker relationship, or
No, investor.
He's investing.
Oh.
He wants to know what his return is.
Let me repeat the question so everybody can hear. As an investor, how the returns are level, or what do you do with you? How do you put the money through your system?
I understand. So how we operate is we originate loans on our own behalf, so on our own balance sheet, and then we then offer those to outside investors, and outside investors have the opportunity to invest in what they want in at a rate of return that they're comfortable with. So we pass through the interest rate that the underlying loan pays, we pass that through to our third-party investors, and we take a servicing fee on outstanding principal balance, just like, say, a bank would.
How about if I want to present a loan, or I have one of my buyers want to buy a property, how do I present it to you directly?
So to answer the question directly, you just go to our website, Razzle.com. There's a button that says Get Funded. You click the button and it asks you about 6 questions, and that starts the process. What we found, we did some measuring. It takes about 3 weeks, literally 3 weeks, to knock on all of a number of doors before you can line up a lender. Our platform does that process in about 3 minutes. And so we get a lot of challenging properties, a lot of challenging deals that may not necessarily fit a bank. It may fit another institutional level lender. And we have, I think, 200 something lenders now across the country that are part of our platform that are very hungry, very active. But that sourcing, that 3-week typical process can really be the game changer, the deal breaker, if you will, of a deal. So providing it into our platform to quickly line up a lender. I mean, we had a guy came in, I think, on Friday night. He has, I need to close by the end of the month. He already had a term sheet by Monday from one of our lenders, and it was it was in part of South Florida. I think it was in the Tampa area. But it's just a matter of speed. Everything is speed right now. Speed, transparency, get it done. It is somewhat commoditized. So I a little bit disagree with Angel's presentation. There is a bit of being a commodity a little bit. But I know, we all know the bank wants to build a relationship. Quite frankly, the borrower probably wants to build a relationship too. But they also want a good deal, and they want to get that deal done. For all the brokers in the room, right, you want to get things closed. So creating efficiency, removing some of the obstacles, speeding up the process is ultimately what's going to allow you to get paid and have that transaction closed.
Yeah, that brings me also to the same question that I have with TenX. Is how do you as a broker get protected when I pass it through your system, my customers?
So I think right now on the sell side, when a listing broker brings us a listing, we memorialize the relationship between the listing broker and the seller, right? So that relationship goes into our system and becomes protected for the life of that deal. On the buy side, that's where I talked about kind of that preferred provider agreement that we're working on, where we are going to allow buy side brokers to register themselves and their clients who are interested in buying a deal for a set period of time. If that deal transacts and there is a cooperating agreement available, we will pay that out of our side. So I think we are really working as a firm nationwide to kind of express that we are here to provide or protect the relationships between the broker, both on the buy and the sell side, with their clients, because we are not a brokerage platform. We are an online transaction platform that provides that transparency and that ease and efficiency that I think everybody's talked about.
Okay, let me ask all of you a question. How do you see the market really coming as far as interest rates, availability of money, and availability of properties also? Because we heard a lot about it today, that the changes are coming. So how do you guys see it? Anyone can start.
Well, availability of money is huge.
Huge.
There's a ton of money out there, but like a property or a business or anything else, everything has a price. And what I mean by that is that depending on the risk profile of the transaction, you're going to find money. There's no shortage of money for lending out there, whether it's through a bank or through hard equity lenders. It's plentiful. In terms of interest rates, I don't see the market forces or the economic forces that are really pushing up interest rates. The United States, continues to be a safe haven internationally for investment, and that demand on treasuries is what's holding down interest rates. And although the Fed would love to see interest rates rise, the market pressures are truly keeping them low, and That's something that, we at least, certainly for the next foreseeable future, see very minimal change and no significant change in that area.
Yeah, I echo exactly what Angel is saying. The amount of capital chasing deals, as all you guys know, is truly remarkable. And I think the big difference between this cycle and maybe the last cycle we had is at the end of the last cycle, there were a lot of people very highly leveraged and not a lot of real cash behind in the sidelines. Right now, everyone says, or a lot of people say, look, things are looking toppy, a lot of people are levered up, but there is so much cash waiting to be deployed. It looks a little different than the last time. But on the same token, equity funds come to me that have 50 million, 200 million in equity behind them, and they are levering that equity up at the fund level 1 or 2 times. So on the investment level, it looks like they've got lots of cash, but you peel back the layers a little bit, and there's a lot of leverage that's just in different places. So it's anybody's guess as what's going to happen going forward.
I just add on the debt side, why there's plenty of debt capital available. It is selective. If you're building a hotel right now, I would say that's in your business plan. Do not do it because you're not going to get funding. It doesn't exist right now. Definitely not in Florida. So the asset class is critical. Multifamily is continuing to be hot. That is an asset class that is definitely, you see a big hunger from the lending side of the world. Office is still somewhat selective, but the class of the property is always critical. And shopping centers, believe it or not, I've seen, I think Angel's touched on a little bit about, sort of the Amazon effect. Shopping centers have become less glamorous. In fact, there's almost this, I don't know if it's true or not, but certainly in the CMBS world, there's almost like a flat-out restriction. Like they just don't want shopping centers, and they're dumping them left and right in anything that's being acquired. So, the asset class I think is critical to the game.
Angel, and then you.
I don't mean this to be a plug for Gibraltar, and I hope it doesn't come across that way because it's really a plug for community banks in general. But I agree with you 98%. The 2%, I disagree with you. We just did a loan for a hotel, a $15 million loan for a hotel in the Doral area. Are we in the market for doing hotel loans? No. But we are in the market to service our clients. And that's the distinction and the difference between a commoditized relationship and a relationship.
Pretty good.
I think from TenX's perspective, we continue to see deal volume go up. We did just over $3 billion in commercial real estate sales last year. We're on pace to do over $3.4 billion this year. And we're looking at like a $5 to $6 billion number yet next year in terms of planning. I think the thing that's interesting for us, focusing more on the asset side and tying it back to the finances, what we've started to see a lot of, and by a lot of, I mean, 10, 20 deals in the last 2 months of people approaching us who bought a deal during the down cycle, levered it up with very, very competitive debt, sometimes CMBS, sometimes regional or local bank level, and that debt is not tradable or pay-offable, but it is assumable, and people have a significant interest in that. I mean, we're talking things, to Andrew's point, in the high 3s, low 4s with some IO on it that was very, very well put together debt on very quality product, and we're getting the opportunity to market and sell those and getting tremendous traction from the marketplace on, I would love to own this debt and just clip coupons. So.
Yeah, another quick question that just popped in my mind. What's in it for me in one of each of your platforms, Gibraltar? What's in it for me as a broker?
Well, as a real estate broker, probably 25% of my inquiries are from real estate brokers that have either an investor or a foreign national who needs to close on a property for which they put a deposit down 3 years ago. And they need to get financing to get the remainder of their commission paid at closing. And we're able to close deals where other people cannot at better rates than a hard equity lender can.
For Gibraltar, it's very easy. We deal with a significant amount of brokers, both residential and commercial real estate. Our business is real estate. when you look at what we do, I'd say 90% of our lending is in the real estate arena. It's typically on the residential side at the higher end. Our average residential loan is $1 million. And on the commercial side, it's between 2 and 5. But the difference is, because we're locally owned, we're locally managed, we have a local board of directors, we make our decisions very close to the market, we understand the market, and we're responsive to the market. We're not everywhere, but where we are, we can make a difference. And to the brokers, that's the difference between getting a deal done and not getting a deal done.
We work with both real estate brokers and mortgage brokers actually as well, but probably a lot of the folks in the room are on the real estate brokers. So we do two things with real estate brokers. One is, if you have a property that you're listing and you want to get that property pre-approved with some terms, we can provide that. One of the critical factors of any deal, it's two components. So you have the real estate itself. Is it viable? Does it work? Is it the right asset class? Is it going to make sense? Is there a lender for that? We can accomplish that part of it. Ultimately, that buyer, whoever the sponsor is their financial wherewithal is then going to come into play once they get under contract. But at least if you can sort of initially get some terms and get the property approved, we can provide that. Certainly on the buy side, there's a bunch of brokers in the room. My friend Mickey here, we've helped a lot of his clients get financing once they get under contract. There's a timing maneuver that's involved, right? We have contingencies, we have to get closing fast, so everyone's got to be hands on deck to find the right lender matched up and get them closed. So that's the way we primarily help real estate brokers to get the transaction closed, so you ultimately can earn your commission on that transaction.
Kevin?
I think for TenX, for the brokerage community, it would really be access. On the sell side, we are very much of a technology mindset. So when you bring a deal to TenX and list it with us, we turn over every piece of contact information for every individual that signs a confidentiality agreement with us to the broker. And we say, here, we need you to follow up with these people, we need you to sell the deal, and oh, by the way, we're okay with you keeping that contact information. Our mentality is very much tech in that we're okay with you having that and doing a deal outside of us, whether it's a lease, whether it's a sale, whether it's a purchase. It doesn't matter to us. We believe that if the experience is valuable enough, you're going to come back and you're going to do more business with us. I think on the buy side, it's a great platform for you to identify opportunities for your clients to invest in. So I would say access, and then I think just to leapfrog ahead and piggyback off of what Ken and Pike said last time, I think 2017 is going to be a big year for us in terms of data and what we can do with that for our clients.
Okay, and how, go ahead, you were going to say?
No.
And how can we help you to do better as brokers? What do you expect from us, let's say?
So I think from TenX's perspective, we expect brokers to do what brokers do best, right? We have the ability as a national firm to look at deals all over the US, but the reality of the situation is this is a very localized and regionalized game that we all participate in, right? So we need brokers who understand the micro level economics of a market and the asset that they are looking to market and trade on our platform. So I would say, that market.
Is there a threshold on the properties that you put in TenX?
I'm sorry?
The properties that you put, price, right?
Yes and no. Typically, we will not look at many deals under $1 million. That being said, you will find them on the site and they're part of a portfolio. So if there's a portfolio play of smaller deals that kind of lump together to be over $1 million, we will look at those deals as well.
One of the remarkable things that I'm seeing in this cycle is, believe it or not, I don't know if you have heard of this amongst yourselves, but there are people today that are walking away from condo deposits because they can't get financing, okay? It's happening every single day, and a lot of that could be solved with the help of brokers who would pick up the phone and make a few phone calls or send a few emails. So if you hear of anybody who's ready to do that, tell them to hit the street and try to help their clients out.
I can't help with the condo stuff. We only do commercial, but Our platform, rather than send a couple emails and make a couple of phone calls, it's one platform, it's one click of a button, and you're instantly connected to basically every major player in the market. I think the other thing that brokers could do to really help the situation is get the deal organized, have the financials done and help it. A lot of these owners, even on the rental stuff, they're just not organized. They don't even have a rent roll ready. They don't have their leases in order. Leases are critical to having, especially if you're going to get institutional bank level financing. It's just sort of helping these owners get organized. If you're on the buy side, making sure that they're going to have, if they want, again, bank level financing, get your tax returns in order, get your financials in order, and have it organized. It's just going to help speed the process up. You're going to get paid way faster.
For me, it's easy. Bring me your deposits. Deposits are what fuels loans. With your deposits, we'll put more loans out there and we'll continue to provide more financing.
Perfect. It was said today, it was said today that it's going to be very challenging to finance properties for 30 years because of the environmental issues, because of seawater level rising, and every one of those changes. How do you see that? What's going to happen? What do you see on that long-term money?
I don't think the banks are going away. I think Angel hit it right on the head. Banks have the cheapest cost of capital that exists today. Everyone in this room is getting basically 0% on your deposits. You're lending banks money at 0%, and they are then therefore lending it out at higher interest rates. So the banking business is a beautiful thing. It's not going away. They will be the dominant player of lending for at least, I think, everyone in this room's lifetime. So that's one of the very select reasons we wanted to partner with banks to provide that level of financing. So I can't really speak to the environmental concerns. I think as long as we have beaches and sun in South Florida, will be a very vibrant economy.
Okay, thank you very much. Sorry about the curveballs.